Hello everybody, I Tushar Jain, CFO and Research Head of Ajayastromoneyguru. Welcome all of you today on 8th February 2021. In this episode, we will discuss about Indian stock markets and what all things you need to consider for next few trading days. So let us first look at the global markets. In the yesterday's session, US markets were highly volatile, and at the end, the Dow Jones closed exactly flattish, and it was up by only $1.39. And if we see the Nasdaq and S&P 500, they were down. Nasdaq was down by around 123 points by approximately 0.84%, and S&P 500 was down marginally by $16 by around 0.37%. So the major uncertainty around the globe is because of the inflation issues as well as the interest rates hikes, which is expected to be announced in the first week of March. Therefore, around the globe there is a lot of uncertainties. Although India's RBI meeting is scheduled, its outcome has been scheduled to be announced on Thursday this week. Therefore, Indian markets eyes will be on the RBI's minutes, as the statement by the RBI governor Mr. Shaktikanta Das will indicate the thinking of the RBI on the interest rates hikes in India. Also, a major concern for Indian markets is the crude oil prices, as the crude oil prices are at the multi-year highs and the levels of 92.50, which is approximately the current market price, has last seen in the month of September in 2014. So almost a 7.5 years high has been made in the crude oil prices. And since India's economy's major portion is being spent on the import of the crude oil prices, therefore the economy of India will definitely be affected. Although because of the elections in some states, the major rise in petrol and diesel prices are not expected to be seen till the election, which is scheduled and which will get over in the month of February itself. Therefore, after the elections, if the crude oil prices maintain the bullish trend, then it is expected to see hike in petrol and diesel prices. Therefore, it is a major contribution in the rise in inflation also. So whenever there is a significant increase and decrease in crude oil prices, it has impacted the inflation. Also, if we see the FIs and DIs data for the yesterday's session, then we can see that in the yesterday's session both FIs and DIs were net sellers. FIs sold by around 1150 crores, while the DIs sold by around 1376 crores worth of stocks in the cash market, and their total selling adds up to somewhere around 2500 crores in cash market. That is why we have seen free fall in the Indian markets in the yesterday's session, as the only buyers in the yesterday's session were the retail investors. Till now, we are betting on the domestic institutional investors because they were continuously buying from the FIs. Now, in the yesterday's session, both have turned to the net sellers. Therefore, more uncertainty has been seen in Indian markets. And as of now, the Nifty 50 is trading at around 17,220, and till now it had made low of around 17,176 and made high at the level of 17,306, and currently it is trading at around 17,220, which is showing very high volatility in Nifty and Bank Nifty. Bank Nifty is also trading at around 37,865 and is down by around 135 points. And if we see the technical side of the Nifty, then a very important resistance on Nifty is at the level of 17,000, somewhere around 17,140, and then a multi-month resistance and multi-month support, and in fact a very important support is at the level of 16,840. So to maintain the bullish trend, the Nifty has to trade above the level of 17,140, and till now it is struggling to trade above 17,200. If we see other indices, almost mixed results have been seen in today's market. The IT index is showing flattish move, and the media index is showing weakness by around 1%. Energies index is showing weakness by around 1%. Public sector and index is showing weakness by around 0.5%. Also, if we see the options data, then we can see that highest increase in the open interest in call option is at the strike price of 17,300, and if we see the open interest, then we can see that highest open interest in call option is at the strike price of 17,500, followed by 17,600 and 17,800, and also 18,000 call option has a highest open interest, although some unwinding has been seen in today's market till now in the 18,000 call option by around 99,300 contracts. And if we see the put options, then we can see that highest addition in open interest in the put side is at the strike price of 17,200, and if we see the open interest, then the highest open interest is at the level of 17,000 strike price has the highest open interest, followed by 17,200 put option. So for this week, 17,000 to 18,000 is expected to be a very important range, and also 17,200 to 17,300 is also expected to be a very important range for the Nifty. And since all eyes are on the RBI's meeting outcome, which is going to be declared on Thursday. Earlier it was going to be declared on Wednesday, but it has postponed it by one day, and now it will be declared on Thursday, that is on the weekly expiry day. And more volatility is expected to continue in Indian markets till Thursday. Therefore we need to be very careful in especially indices, that is Nifty and Bank Nifty. And stocks which you can consider for next 2 to 10 days are ONGC. ONGC is currently at the level of 170.30 and is expected to show some positive move in next few coming trading days. So I hope you like that analysis. That's all for today's episode. Thank you and good day.